Ladies and gentlemen, Assalamu alaikum warahmatullahi wabarakatuh, and a very good day to everyone. Thank you for joining us today for PETRONAS first quarter 2021 group financial results announcement. As I had shared previously, over the course of last year, 2020, PETRONAS responded to the unprecedented challenges confronted by the industry with deliberate steps to ensure that our people remain safe, business could continue, and society could be kept well. We made progress in cushioning the impact of the pandemic and energy market imbalance to ensure a recovery pathway amidst the energy transition. Today, I am pleased to announce a commendable financial performance for PETRONAS in the first quarter of 2021. The results achieved reflect our commitment to commercial and operational excellence while we build our resilience to pursue our three-pronged growth strategy. The first quarter for the oil and gas industry saw some observable recovery in consumer confidence as vaccines were rolled out across the world, with a higher speed of vaccination taking place in particular in the US, Europe and China. With this confidence, we saw Brent prices surge in the first 3 months of 2021, boosted by improving economic activities, combined with OPEC Plus production cuts and Saudi Arabia's additional voluntary lowering of output. Dated Brent prices averaged US $61 per barrel in quarter 1 2021, 38% higher compared with $44 in quarter 4 2020 and 22% higher than the average of $50 in quarter 1 2020. On a month-to-month basis, Brent prices rallied to roughly $65 in March from $55 in January. Encouragingly, we also saw Asian spot LNG prices surging in the first quarter, spurred by increased demand due to Northeast Asia's colder than usual winter, supply disruptions, and also transit delays at the Panama Canal. Spot LNG prices in Asia averaged roughly $11 per MMBTU in quarter 1 2021, up 38% from $8 per MMBTU in the preceding quarter. The price registered was almost triple the average of almost $4 in quarter 1 2020, according to industry analysts. The group has positively responded to the residual impact of a turbulent 2020 with a strong financial performance for the quarter. Recovering from quarter 4 2020, PETRONAS registered 52.5 billion ringgit in revenue in the quarter ended 31 March 2021 and a profit before tax of 14.6 billion. Equally importantly, our focus on cash generation has helped us generate 14.3 billion ringgit of CFFO, cash flow from operations, in the same period. Lisa will elaborate our efforts in a separate update. Ladies and gentlemen, our operational performance demonstrates the dedication and service of the PETRONAS workforce. We remain committed to delivering commercial and operational excellence without compromising our safety standards. Since March 2020, despite having to contend with 3,248 cumulative COVID-19 cases of PETRONAS employees and their contractors, as well as managing 87 cumulative clusters worldwide, the group has continued to discharge its duty of essential operations both onshore and offshore safely and efficiently. This has seen us achieve a daily production average of 2.4 million barrels of oil equivalent per day throughout this first quarter, as well as continuing to service our customers without fail, having now registered the safe delivery of over 11,600 cumulative LNG cargoes to date. At this point, it is only fitting that I take this opportunity to put on record my deepest appreciation to our dedicated employees who have kept energy flowing in Malaysia and to our customers across the globe. Ladies and gentlemen, as COVID-19 uncertainties are still very much part of the reality combined with heightened market volatility, we remain focused on upholding capital discipline and preserving a healthy liquidity position. The PETRONAS team remains unwavering in its focus to create value, pursue growth, and intensify our sustainability efforts. The group continues to believe we must strengthen our overall resilience so it can effectively respond to market challenges and navigate the imminent global energy transition. During this period, we achieved a number of significant enterprise milestones. First, we achieved first gas production in February from the Rotan and Buloh fields in Block H off the coast of Sabah. Second, PETRONAS Canada delivered its first sales gas from its flagship Town North gas plant in British Columbia. ahead of schedule. Third, we continue to award exploration blocks to bolster exploration activities. One of it is Block SB405 in Sabah, which we signed a PSC with ConocoPhillips East Malaysia Limited, a subsidiary of ConocoPhillips and PETRONAS Carigali Sdn Bhd. At the same time, we continued to make discoveries in Block SK417 and Block SK405B PSCs, which helps enhance our Malaysia bid round. Further downstream, we launched Segar at Mesra, a farmer-to-consumer concept for affordable fresh produce at our retail stations as part of growing complementary non-fuel business for PETRONAS Dagangan Berhad, while supporting the livelihood of our local farmers. Over and above these achievements, we are also progressing our growth strategies at pace in diversifying and growing our core business in low-carbon solutions. We've completed 51 virtual pipeline system deliveries in Peninsular Malaysia, 7 LNG bunkering deliveries in the Straits of Malacca, as well as being a key partner in Malaysia's first export of LNG via ISO tanks to China. We continue to make good strides in reducing our GHG emissions across our integrated value chain through hydrocarbon flaring and venting, as well as solar solutions to intensify our commitment to net zero carbon emissions by 2050. Finally, we continue to expand partnerships to advance our low carbon agenda with the signing of a memorandum of understanding with Masdar, a global leader in renewable energy solutions, to build greater access to clean energy solutions. Ladies and gentlemen, the achievements shared demonstrate the efforts we've undertaken to further strengthen PETRONAS Foundation, which will be critical to withstand volatile market conditions as we contend with an energy transition that shows little sign of slowing down. In doing this, we will spare no effort towards fulfilling our purpose to become a progressive energy and solutions partner, enriching lives for a sustainable future. As we move through 2021, PETRONAS anticipates that this year will continue to be shaped by the events of 2020. Let me be clear, the timeline for eventual full global recovery remains uncertain. Any near to medium-term outlook will invariably be a function of the effectiveness of economic recovery measures undertaken by various markets. And on this note, the successful rollout of vaccine programs will be a key factor, more so as increasingly contagious strains of COVID-19 emerge. All in all, uncertainty will be the overarching theme for 2021. I would now like to hand the presentation over to Lisa, who will take you through in more detail of our financial performance in the first quarter of 2021. Thank you. Take care. Stay safe.
Thank you, Tengku Taufik. Ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh, and a very good day to all. Echoing Tengku Taufik earlier, the events of 2020 have compelled us to accelerate our efforts in making our portfolio more resilient. We took several decisive and prudent measures to ensure resiliency and sustainability of the business by successfully implementing cost compression efforts which exceeded target and establishing an agile operating philosophy in making our operations more responsive. These tactical interventions were deployed across the group to preserve value and minimize operational interruptions. Consequently, we were able to position ourselves effectively in navigating through the turbulence and move forward in pursuit of growth. With the strong foundation laid, PETRONAS delivered commendable Q1 2021 financial results, registering a profit after tax of 9.3 billion ringgit. We continued to generate cash flows from operations of 14.3 billion ringgit and recorded positive EBITDA of 22.9 billion ringgit. Notwithstanding, given the uncertainties in the outlook for 2021, arising from the recent resurgence of COVID-19 cases globally, as well as the uncertainty surrounding near-term oil supply, PETRONAS will remain vigilant and continue to drive operational and commercial excellence, as well as maintain our prudent financial management. In addition, we will continue to focus on preserving and strengthening our liquidity position and uphold capital discipline to support both our cash generators and growth strategies to create value for our stakeholders. Ladies and gentlemen, let me now take you through the Q1 2021 financial results. PETRONAS results is compared against the corresponding period last year. The group maintained its strong financial metrics exercising strict capital discipline, and establishing adaptive measures to optimize production to effectively respond to market challenges. Such efforts have positively impacted the group's financials as seen in the improved overall performance for Q1 2021. We registered a profit after tax of 9.3 billion ringgit compared to 4.5 billion ringgit in the corresponding period last year. The improved profit after tax is in line with lower overall group costs incurred, partially offset by lower revenue realized. Group costs stood at 44.9 billion ringgit, lower by 10.9 billion ringgit compared to corresponding period last year, mainly due to lower volume following gradual global demand recovery, coupled with lower net impairment losses. The lower group revenue of 52.5 billion ringgit against 59.6 billion ringgit in the corresponding period last year was largely attributable to lower sales volume, mostly from petroleum products, liquefied natural gas or LNG, and natural gas, in line with lower demand coupled with unfavorable impact on exchange rates. This was partly negated by improved average realized prices for liquids. Our continued efforts to preserve and strengthen liquidity have resulted in delivery of healthy cash flow from operations of 14.3 billion ringgit, albeit 19% lower than corresponding period last year. This provides sufficient liquidity cover for the group's capital investments. We registered stronger EBITDA of 22.9 billion ringgit, an increase of 13% from 20.3 billion ringgit in the corresponding period last year, in line with higher profits. The group ended the quarter with total assets of 593.8 billion ringgit, higher by 19.7 billion ringgit as compared to 31st December 2020. We continue to be in a net cash position of 55 billion ringgit, a position which differentiates us from our peers and a testimony to the group's prudent cash management practices. The group's Q1 results of a profit after tax of 9.3 billion ringgit is a notable recovery from the loss after tax of 1.1 billion ringgit posted in Q4 2020, which is attributable to our resilience and agility in responding to the unprecedented challenges that affected the industry at large, coupled with improved average realized price. Ladies and gentlemen, with the acceleration of energy transition and changing customer needs, it is imminent for us to ensure our portfolio is robust and sustainable. As we strive towards a more resilient portfolio mix, we continue to uphold strict capital discipline while ensuring capital allocation that strikes an optimum balance between risks and rewards. Since last year, we have intensified our capital allocation exercise to ensure sufficient allocation for our cash generators, while also increasing the allocation for our investments in non-traditional business, or what we call step-outs, which include specialty chemicals, renewable energy and storage, as well as hydrogen play. For Q1 2021, 3% or 200 million ringgit of total capex incurred was for step-outs in order to support a more robust, high-performing and sustainable portfolio. While we continue our investing activities, many of our projects were affected by the movement restrictions order. Both our domestic and international projects were delayed, with some being rephased, resulting in lower overall capex incurred at 6.7 billion ringgit against 8.5 billion ringgit in the corresponding period last year. Upstream continues to be the major component of total capex incurred at 39%, followed by corporate and others at 27%, gas and new energy at 22%, and downstream at 12%. The group's cash and fund investment balance as at 31st March 2021 stood at 149.4 billion ringgit, an increase from 141.3 billion ringgit as at 31st December 2020. This increase was largely contributed by sound cash flows from operations of 14.3 billion ringgit, which sufficiently supported capital investment of 6.7 billion ringgit and dividend to government of 2 billion ringgit during the quarter. PETRONAS continues to lead its peers in its CFFO margin, which stood at 27% for the quarter. As part of the group's liquidity management strategy, we have successfully raised funding from the international debt capital market during the months of March and April. The first was a $600 million bond with 7-year maturity issued in March. This was raised specifically to fund our Canada operations and to refinance its already utilized revolving credit facility. The second was a dual tranche $3 billion bond issuance in April. The dual tranche comprises $1.25 billion 10.75-year and $1.75 billion 40-year conventional notes. The use of proceeds is mainly to pre-fund our bonds, which are maturing in 2022. Both issuers were very well received by the investors in the international debt capital market, drawing high demand and thus resulting in tightly priced bonds. In fact, we achieved the lowest coupon and tightest issue spreads ever in our nearly 30 years of successful issuance history. This is testament to the strength of our credit and investors' confidence in our long-term future. With these issuances, we have further strengthened our balance sheet and extended our debt maturity profile. Ladies and gentlemen, our commendable financial performance in Q1 2021 was supported by strong delivery of our operational excellence across the businesses. Upstream business continues to focus on operational efficiencies and commercial excellence despite challenging business landscape. Upstream recorded daily production average of 2.4 million barrels of oil equivalent per day and production entitlement of 1.7 million barrels of oil equivalent per day during the quarter. This is marginally lower against the corresponding period last year, mainly driven by lower production of liquids due to operational challenges in Malaysia and lower production in Iraq. Despite the operational challenges faced, Upstream registered higher profit after tax of 6.9 billion ringgit against corresponding period last year, in line with lower operating expenses incurred. Upstream remains focused on maximizing its cash generators by taking prudent steps to ensure a healthy funnel of resources and reserves for sustainable production. The first quarter saw Upstream concluding several key achievements. Amongst others, 4 projects achieved first hydrocarbon. This includes first gas production from Rotan and Buloh fields in Block H offshore Sabah. The gas was successfully received by PETRONAS' second floating LNG facility, also known as PFLNG 2 for LNG export market, thus further strengthening the integrated value chain across the group. A total of 3 projects achieved final investment decision, including 2 in Malaysia and 1 in Indonesia. Upstream made 3 new exploration discoveries, with 1 in offshore East Java and 2 successful discoveries in Baram and Balingian province offshore Sarawak. Supporting the group's strategy on expanding core business, PETRONAS awarded Block SB405 off the coast of Sabah in February to ConocoPhillips East Malaysia Limited and PETRONAS Carigali Sendirian Berhad. The award of this exploration block is expected to bolster exploration activities off the coast of Sabah, following the opening of more block investment opportunities in the country. On 26 February, PETRONAS launched its 2021 Malaysia bid round to potential investors, offering 13 new attractive offshore exploration blocks located within the country's proven hydrocarbon basins. In the bid round, PETRONAS introduced 3 new production sharing contract terms to sustain the attractiveness of the blocks on offer. On operational excellence, Upstream achieved several milestones in the first quarter. Amongst others, Upstream deployed Phase 1 of PETRONAS Integrated Pipeline Integrity Assurance Solutions, or IPIMS, in Malaysia's upstream assets, which acts as a one-stop integrated digital pipeline integrity management solution. IPIMS is expected to improve pipeline inspection processes and integrity management efficiencies by more than 60%. Significant progress achieved in the implementation of software as a service in the Open Subsurface Data Universe Exploration and Production Data Platform on cloud. This would allow integrated users access to E&P data on a single platform, hence saving time and costs. Additionally, outside Malaysia, Upstream continues its focus on efficiently monetizing its unconventional resources. In the first quarter, PETRONAS Canada successfully delivered its first sales gas from its flagship Town North Gas Plant, British Columbia, in January 2021, ahead of schedule. The plant is expected to deliver a processing capacity of 555 million standard cubic feet per day by 2025. In line with PETRONAS's aspiration towards achieving net zero carbon emissions, or NZCE, by 2050, Upstream recorded a 26% reduction in greenhouse gas, or GHG, emissions in the first quarter of 2021 compared to the same period last year, mainly driven by emissions reduction efforts arising from hydrocarbon flaring and venting. Ladies and gentlemen, the gas and new energy business solidified its position as a reliable provider of cleaner and renewable energy solutions through operational resilience and proven technological innovations. The business successfully captured the LNG demand arising from the colder winter in the Far East by establishing adaptive measures to optimize production and registered gross LNG sales volume of 8.9 million metric tons in Q1, at the back of strong operational equipment effectiveness at 97.4%. As a result, gas and new energy business successfully realised 2.1 billion ringgit profit after tax during the quarter. On maximizing cash generators, PETRONAS also delivered a total of 11,672 LNG cargoes from the PETRONAS LNG complex in Bintulu since the first delivery in 1983. For domestic pipe gas, PETRONAS has secured the renewal of 580 million standard cubic feet per day of natural gas supply deals to domestic customers, which will be transported via the Peninsular Gas Utilisation Transmission Grid, spanning over 2,623 kilometres across Peninsular Malaysia. The latest LNG solutions that provide a reliable supply to off-grid and marine industry customers continued to gain traction in the first quarter of 2021. A total of 51 virtual pipeline system deliveries were completed in Peninsular Malaysia, coupled with 7 LNG bunkering deliveries in the Straits of Malacca. PETRONAS was also a key partner in Malaysia's first export of LNG via ISO tanks, with LNG molecules from PETRONAS LNG complex used to fill up 205 ISO tanks for onward delivery to China. PFLNG Dua facility delivered its maiden LNG cargo in March 2021, 1 month after achieving its first LNG drop. Meanwhile, PETRONAS's first floating LNG facility, or PFLNG-1, delivered 4 LNG cargoes in the first quarter of 2021, growing its total LNG cargoes delivered to date to 42 since the start of production in 2017. On stepping out, PETRONAS New Energy continues to grow its domestic and international solar capacity. In Malaysia, PETRONAS New Energy has more than 104 megawatt of solar capacity in operation and under development. Internationally, PETRONAS New Energy's wholly owned distributed energy company, M+ Energy Solutions, has over 910 megawatt of solar capacity in operations and under development in India. In line with PETRONAS NZCE aspiration, Malaysia LNG Sendirian Berhad signed a key term sheet to purchase 90 megawatt of electricity supply generated via renewable sources from Sarawak Energy Berhad for a period of 20 years starting from 2024. The electricity purchase agreement will see PETRONAS LNG complex achieve a potential reduction of 0.5 million tonnes of CO2 equivalent in GHG emissions annually. Ladies and gentlemen, downstream business delivered solid operational performance on the back of gradual improvements observed in the market towards the end of 2020. As downstream business is primarily a margin-led business, efforts to build the resilience in operational excellence was heightened to cushion any impact from headwinds that could dampen demand. This led to overall equipment effectiveness sustaining 92.5% across all business segments, backed by strong asset reliability across the value chain. Downstream business continues to strengthen its performance by leveraging on technological and digital advancements to drive down overall cost to serve and de-risking inventory lag. Sustaining operational excellence together with accelerating strategic plans to secure new revenue streams led to 0.2 billion ringgit profit for downstream business for Q1 2021 compared to loss after tax of 1.2 billion ringgit in the corresponding period last year. PETRONAS Chemicals Group Berhad sustained its operational performance and recorded plant utilisation rate of above 90%, producing 2.5 million metric tons of petrochemical products. The global market indicated positive product prices, contributed by gradual improvement in demand, mainly from Asia's emerging market. The marketing segment recorded overall sales volume of 5 billion litres, with PETRONAS Lubricants International recording an improved sale by 14% due to higher demand from China and Asia Pacific. For the domestic market, PETRONAS Dagangan Berhad recorded a gradual improvement quarter on quarter, with overall sales volume remaining challenged due to the re-implementation of the movement control order in many states. Downstream will continue to reshape its portfolio mix to ensure high value returns and increase sustainability, including new prospects within the non-fuel business and specialty chemicals. As part of its non-fuel business growth strategy, PDB reinvented its retail offerings by expanding its food and beverage products through the Makan at Mesra initiative, which addresses the increasing demand for food-to-go solutions. To date, there are 9 PETRONAS stations that offer Makan at Mesra, with plans to expand up to 200 stations by the end of 2021. In addition, earlier this year, PDB launched Segar at Mesra, a farmer-to-consumer concept that supports local farmers' livelihoods while ensuring consumers have easy access to fresh produce. Meanwhile, PDB's commercial business has put in place effective strategies to capitalize on demand recovery, whilst continuing to increase customer base and experience. The liquefied petroleum gas or LPG business will continue to expand its accessibility to benefit more customers, including capitalizing on digital platforms for the convenience of its customer. PETRONAS Lubricants subsidiary, Ericsson's, a car care and multi-purpose lubricant plant in Cernusco, Italy, is a zero Scope 2 GHG emissions operations. It has been gradually installing solar PV panels, which now accounts for 630 megawatt peak or 30% of the plant's electricity consumption. Since 2018, the remaining power has come from renewable sources. This initiative supports the group's efforts towards achieving its net zero carbon emission aspiration. Ladies and gentlemen, that brings us to the end of the result announcement, and I thank you for your kind attention.